Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's keep up with our analysis of the euro currency. The strategy trading plan that we have created in the weekend works fine by far. So you can see the pullback that we have suggested right from the 108 area has started, and actually market already stands at the point that the first point where we could think about taking the short position. Just to not repeat everything that we were telling about the current situation last week and even week before about the grabber on the vehicle chart, big pattern that we have, its targets, possible extensions, so all the stuff we already discussed. So let's just talk about the current situation. So with this type of the performance that we have, we're on the slope of the right arm. Here we should not get really deep retracements, especially when one of them has been formed here on the data release. And actually it was more or less logical, just because previously it was solid upper direction, so some momentum was existing here, and then it's actually pushed price slightly higher. Now we see some downside acceleration. So here's the bears should control the market, and since market is not at oversold, here's actually an area that it should pass to the 107 destination point. This particular area also the target of the weekly pattern, weekly grabber. So from that standpoint, we have clearly bearish context. Trend also stands bearish. That's why currently at the resistance area where market stands, we could start thinking about taking a short position if you, of course, would like to take the new short there, if you do not have it already, or you would like to add more, for example, or you just missed chance to take short here where we traded it last week. So here's actually market has reached the first area that we have talked about in the weekend. If you take a look at the forward time frame chart, you could see how it really looks like right now. So that's our OP and 618 support 108. We said this market will reach it, start upper bounce. It's already started. Here we have great thrust down. It is not, well, literally it is not enough for Giordanopoly pattern, because Giordanopoly demands 8 bars to the downside. Here's we have a small amount of the bars, but take a look at the size of these bars. They are really strong. So from that standpoint, I suggest that theoretically this performance here might be treated as a kind of the bread and butter sell. Treat it as a momentum bearish trade, bread and butter sell lookalike, whatever. The core stands the same. We have strong downside momentum, strong acceleration, market is not at oversold, and we have first bounce to the 30% level. This level, as we have specified, will be the one where we intend to take a look at taking the short position. With the more details about this upper direction, you could see that here actually it has started with a minor head and shoulders pattern. And now its target already has been completed. So market hits the XOP 145, 155 level. So this agreement's resistance, and you can see some reaction starting. If you would like to, you could get even more guarantees, more insurance. For instance, you could wait for appearing some minor pattern here, bearish pattern. Drop your time frame to the 50-minute chart. Maybe take a look. It's possible to get here some hand and shorts or something. If you would like to place tighter stops, if you'd like to get another pattern on your back, that's also the way how you could act. And here I also would like to show you interesting moments. Sometimes I'm just forgetting about it. But as you know, trading with the hand shoulders, we have two different ways to estimate the target. The first target estimation that we usually follow is the ABCD pattern, based on the shoulder and the head. And here you can see 161 instance right here. Classical approach to target estimation. It's a destination between the bottom of the head and the neckline. And you should count from the points of the breakout of the neckline right there. Why I'm talking about this? because here you could see that it's a bit curious performance a bit. Market already hits the XOP, but we have this, well, unnecessary tail to the upside. This particular is happening, of course, from the technical point of view. Because of this extension, you can see that based on the classical, you can see the target stands slightly higher. So once has been confirmed and completed, market immediately has formed bearish reversal candle here and dropped. So when you will trade in the future head and shoulders, you trying to compare these two different extensions, and depending on what you would like to do, you could use different targets. So for instance, you would like to close the position. It would be better to close at the one that stands nearer to the market, lower. It just lets you to avoid the competition of the orders closing right at the more extended target. And also that could help you if you like take the position to not place stops too close. So you have to foresee this possible performance and just take it into consideration. That's a few moments that seems interesting to me from the practical point of view. Hopefully this will be handy to you as well. So now actually what we are doing, we are, as market stands at the point where we suggested to consider taking the short position, we're not considering taking new longs. And here you just need to make the decision how you would like to act, whether you just take in position, placing stop above and just see what will happen, or you will be watching for lower time frames and trying to identify some smaller reversal pattern and take the trade based on particular this pattern. This depends on the skills, some preferences, mentality, so it's very personal. But in general, overall, our trading plan remains the same. First stage already has passed. Market has shown the pullback that we talked about. Now let's see what will happen around this resistance area.